Sometimes you place orders in your trading platform and the market will hit you out before going in your favor. Wow, this is terrible. But it is not because you have high stop losses. It is not because you made mistakes. It is because you fail to understand price action rules. In this video, I'll show you some price action rule that changed my trading approach, and it can also change yours. So without further ado, let's jump in. I'm James Reje. I'm a forex trader. I've been trading for years and I want to teach people how to trade and also share my trading experience and advice. All you have to do is to like this video, click the subscribe button and turn on the notification bell so you can easily get notified whenever we drop a new video like this. And also on our community, we share trading advice, trading signals and also trading strategies that can help you become profitable. So all you have to do is to click the link in the description of this video or in the comment box so you can join our community and learn how to trade like a pro. For you to understand this price action rule, you have to understand what moves the market and why the market moves. Support and resistance zones or demand and supply levels moves the market. Buyers and sellers controls the market. So that's why in uptrend, support level are expected to hold. In downtrend, resistance levels are expected to hold. Now you understand what moves the market. That's the buyers and sellers. You and me moves the market. You are a buyer, I'm a seller. You are a seller, I'm a buyer. We move the market. But another thing why market move is to occupy gaps. Most times the market will create gaps, we call them fair value gap, and sometimes the market will reverse only to occupy this fair value gap. Sometimes these fair value gaps can turn to support and resistance levels or demand and supply zones. And the last one, which is the king, is liquidity. Market moves to clear liquidity or to grab liquidity. So market makers, big institutions, they can't trade without your money. That is liquidity for them. My money, your money is a liquidity for them. So for you to trade without being a victim of this liquidity, you have to understand some price action rule. It is because of this liquidity, that is why you will put orders in your trading platform and the market will hit you out before going in your favor. It is because your money are being used as the liquidity to push the price up. So for you to avoid being a victim of this liquidity, you have to apply this price action rule we are going to reveal soon. So now let's jump into our whiteboard to see and explore more about these three things that moves the markets, and also see how you can blend some price action rule to your trading strategy to avoid being a victim of any of these such things and to trade like a pro. Now let's move on. Understanding this price action and understanding why you need to blend it to your strategy means understanding what we are going to talk about now. Seeing the supply or resistance level and also demand and supply levels. As you can see, there is always liquidity lying below and on top of it, because when the price pulled back to this area, some people buy it here and put their stop loss here. Now some people sold here and put their stop loss above. Some people also bought here and put their stop loss above. That means there's always liquidity lying above here and here. And also understand that big guys, they move to clear liquidity. So if you are placing orders here, they will clear your liquidity. That means if you place order here thinking that it will hold, they might just hit you out and boom, go in your favor, because there is always liquidity here and they are targeting this liquidity. So let's just assume that you place buy order here and expect this level to hold. So the big institutions, if they want to enter a trade, first of all, they will clear out this liquidity here. So clearing this liquidity means hitting you out before going. Then they just push the price up and they just push the price up. So retail traders keep thinking that the price will start moving, then they will come back, clear the liquidity. That means hitting you out. Then what will happen? They will move the price in your direction. The same thing is applicable in this fair value gap. If price keep bouncing off from this fair value gap, what will happen? It will become a support level. So that means there is always liquidity lying below here. So if you place your buy order here, thinking that it will hold, the big institutions, they may just boom, take you out and go. So liquidity is king. Before the big guys, market makers, before they enter trade, first of all, they will take liquidity. And for you to avoid being a victim of this liquidity, then take this rule 1. So the first rule is what? See support and resistance, fair value gaps, other blocks, etc. as areas or zones, not lines, or see it as an inducement. If you see it as zones, it means that you won't just place your order at that line because you know it is an area, you understand. And if you see it as inducement, it means you are expecting the market to remove the liquidity before going up. So if you see it as zones or inducement, it can help you to avoid being a victim of this liquidity. So now, if you see it as areas, how can you know when the liquidity have been taken out and the price is ready to move? Then that is where we will bring the rule 2. Okay, understand me. If you see it as zones or inducements, how will you know when the price is ready to move, or when the market makers or the big institution have taken out the liquidity and is ready to move the price? That is where we will bring the rule 2. But for us to bring rule 2, we have to understand one particular chart pattern called M pattern and W pattern. So here is the M pattern and W pattern. If you see this W pattern in uptrend, then be ready for a strong buy. If you see this M pattern for downtrend, be ready for a strong sell. That means anytime you see this in supply level, expect that supply level to hold. And anytime you see this one on resistance level, expect this resistance level to hold. Okay, you understand? If you see this in resistance level, expect the resistance to hold. If you see this in support level, expect the support level to hold. So this is the trading approach you have to understand. First of all, you mark out your supply and resistance levels in higher time frame. If you're a day trader, you can use 4 hours and 1 day to mark out this level. So when the price comes to that level, go to the lower time frame like 30 minutes or 15 minutes to spot this chart pattern. If you spot this chart pattern on that support or resistance level, it means the liquidity have been cleared and now the price is ready to go. So first of all, this is gold USD. We are going to see a chart example of liquidity first, okay? And also we see a chart example of M pattern and W pattern, and then we see how to trade it. So seeing this now, you can see this level is an order block. Some people will place order at this level expecting it to hold. Also, the line you can see is also a support level. Some people will just place their buy order here and expect it to hold. Yet the level head, you can see the level head. But before it hold, as you can see, it's removed those people who just placed order before moving. This is liquidity. Liquidity was grabbed here before the price moved. As you can see this picture, this is a picture of one of my students who just entered the trade without waiting for liquidity grab. And as you can see, the market removed his money, the market hissed him out before going in his direction. That means you have to take support and resistance levels, order blocks, fair value gap as zones. And if you take them as zones, don't just expect them to hold. You understand? Wait for confirmation. So this is a chart example on Euro USD. This is one of the trades I took last week, and also I shared it with some of my students. So as you can see, this is a fair value gap on 4 hours time frame. And as you can see, we are using 1 hour time frame now. This is a fair value gap on 4 hours time frame, and also because this fair value gap have held many times, some people are using it as a support level. Okay, so now as you can see, the market fade from here and touched the fair value gap or the support level. Then what happened? The market started moving. But before the market moved, if you go down to 15 minutes time frame, you will see this W pattern, meaning that the market is ready to go. This is the 15 minutes time frame, and this is the W pattern. As you can see, the W pattern in this support level. Okay, as you can see, when the market touched the support level, it formed this W pattern. And also, all you have to do, and here all you have to do, is to wait for this leg line to break before you enter, so you don't be a victim of liquidity. Okay, so when I saw this W pattern in this support level or in this fair value gap, all I did is to pull my buy order. I pulled out my long position. I placed it immediately after the break, and I adjusted my stop loss beneath this low. Okay, then I targeted 1:3. Okay, you can still target higher, and as you can see, when the W pattern formed, the market have been going up with crazy. Okay, if you still targeted 1:5 risk to reward, you hit TP. If you still targeted 1:4, your TP was hit. Okay, so all you have to do is to mark out your fair value gap, your supply or demand zones when it comes to that level to avoid being a liquidity to the market. Wait for this M pattern to occur. Also, let's see this chart example on GBP/JPY. So this is GBP/JPY. As you can see, market have been touching this particular area. Market have been touching the area. Market have been touching the area. So now it is now a resistance. So how can we make a trade here? So when the market pulled up to this level with momentum, okay, as you can see, the buy momentum is high. Let's adjust to 15 minutes time frame. All right, this is 15 minutes time frame. As you can see, the buy momentum is high. Okay, so now if you take this resistance level as lines, as you can see, if you take it as lines, the market will hit you out before what? Dropping. And also, if you just put limit sell order here, the market will hit you out and start dropping. So first of all, take them as zones and also wait for M pattern to form in resistance level before you what? You sell. Okay, so now let's adjust. Let's zoom it. As you can see, this is 15 minutes time frame. This is M pattern. M pattern in this 15 minutes time frame after it have taken liquidity. So the market took out liquidity here, then what? Formed M pattern. And as you can see, after this M pattern, all I did is to pull out my short position. I pull out my short position, I drop it immediately after the break. If you expect, if after the break and you enter immediately, you can get less risks to reward. But if you wait for the test at this leg line, it can give you more risk to reward. But waiting for retest at this leg line, you can miss trades, and that's part of the trade. Okay, just place your short position immediately after the break and what? Cover the high, and now your TP should be the next key level. If you also adjust it, you can see you can still drop your TP here, which is almost 1:3. I love targeting 1:3. Okay, see, I just targeted 1:3 and the TP was hit. I also shared these trades with some of my students. Okay, so this is it. Take support and resistance levels as areas, or favorable gaps as areas, or other blocks as areas. And when the price come there, don't just expect them to hold. Wait for confirmation. This will help you to avoid being in liquidity through the market. If you have any question, don't hesitate to drop it in the comment box. And also understand that no strategy works 100% of the time. Your goal is to cut your losses and increase your winnings. So that's why you need to apply appropriate risk management. A trader without risk management is a gambler. So that is it for now. And don't forget to like this video, click the subscribe button, and join our community for more trading tips, guides, and signals. Thank you for watching. See you at the top. For now, goodbye.